Hey there, it's Lynnette Khalfani-Cox. I'm the co-founder of AskTheMoneyCoach.com. Do you know what the difference is between federal student loans and private student loans? A lot of people have no clue. I know you just went to school, you borrowed, you signed on the dotted line, and you said, I don't care, I just want my degree, I just want to do whatever it takes, I'll worry about paying it off later. Well, you should really think about that before you sign on the dotted line. Yeah, you're going to go through that exit counseling interview. That's when they say, you know, this money was not free. It wasn't a gift for you. This was a loan that does have to be repaid. That might be a couple years down the road. So you might say, I don't want to think about it right now. But when you're still borrowing for college, you really should know the differences between federal and private student loans. So I want to tell you exactly what they are. First off, it's smart to always consider your federal student loan options first before you go into the private market. The reason is that federal loans have better fees typically. Sometimes there's lower origination fees that you have to pay up front. They have better loan forgiveness options. They have better deferment options as well. So loan forgiveness might come in on the back end after you've taken out the loans. Maybe you work in public service as a teacher, as a firefighter, as a cop, etc., as a doctor in an area where there's a need for medical specialists. Well, you might be able to get some of your loans written off later, but that's only if you have federal student loans. That's not the case if you have private student loans. Now, that's not to say that private student loans can't be a good deal for you in some cases. Some lenders actually have interest rates that are fairly competitive with federal student loans, especially since as of this summer, as of July 1st, 2014, the interest rates on federal student loans went up. So it's about 4.7% right now for undergraduate students and about 6.2% for graduate students. Parents who are borrowing on behalf of their students, their kids, are paying about 7.2% for new loans that originated in the summer of 2014 all the way through June 2015. Now, so if you can find a private loan that has a better rate than those terms, by all means, maybe you look into that. But here's the thing. On the private student loan front, this is another one of the key differences and why some people turn from the federal market to the private loan market. One of the positives or pros of getting a federal loan is also, in some cases, some people say, one of the drawbacks as well of getting a student loan through the federal government. The reason is that those federal loans are capped in terms of how much money you can borrow. The government sets limits on it, and it's $31,000 for students who are dependents, and most undergrads are dependent upon their parents. You know, they're going to the bank of mom and dad. Mom and dad are supporting them, claiming them on their taxes, etc. If you're an independent student, the maximum that you can borrow is $57,000 via the federal government. Now, you all know how much college costs these days, right? So if you think about it, all in for public schools, you know, $25,000, $30,000 is the average when you look at tuition fees, room and board. When you look at private schools, $40,000 plus, $50,000 plus, $60,000 even annually. So some people say, if I need to borrow for college, the federal loans aren't going to do it for me. It's not enough. I need to go elsewhere. And thus, some people go to the private loan market. I would encourage you, if you're going to take out private loans, to just really do some comparison shopping. Look around, find the lenders that offer the best rates and terms. Find some who might give you special deals on the back end. Like if you make your payments on time, maybe they'll lower your rate. If you're a good student, maybe they'll lower your rate. And find out if they offer any kind of forbearance or loan deferment options. Let's say you get out of school and you haven't been able to find a job yet. Or let's say you are sick and you just can't work for a while. Do they have any programs? Find out about that before you sign on the dotted line for those student loans. And in fact, you should know this for federal loans and private loans. I hope this helps you. This has been Lynnette Khalfani-Cox. Again, I'm the co-founder of AskTheMoneyCoach.com.